Hi, I'm Jimmy Sexton, president of the Esquire Group. Welcome to part 3 of our series, U.S. Tax Obligations of U.S. Citizens and Residents Living Abroad. In part 1, we discussed the income tax obligations. Part 2, we discussed the FBAR. And in part 3, we're going to be discussing estate and gift taxes. We're going to start off by talking about the gift tax. Now, as a U.S. citizen or resident, you're entitled to give an unlimited number of people $14,000 per year tax-free. That means that I could give any one of you in the audience $14,000 and it would not be taxable to me, it would not be taxable to you. I'm not going to give each one of you $14,000, but if I wanted to, I could, and there would be no tax consequences. Now, by giving up to $14,000 a year tax-free to an unlimited number of people, you're not even required to file any returns. No gift tax return, nothing. If you give a gift over and above $14,000, then it's going to necessitate the filing of a gift tax return. U.S. citizens are allowed to gift up to $5.34 million tax-free in their lifetime. It's called the lifetime gift tax exclusion. That number is also adjusted annually for inflation. So $5.34 million is the 2014 exclusion amount. So in the event somebody were to give over $14,000, that gift still would not be taxable as long as they hadn't gifted over $5.34 million in their lifetime. But they would have to file a gift tax return to report the gift and the decrease in their lifetime gift tax exclusion. If the amount of gifts given over their lifetime exceeds $5.34 million, those gifts are going to be subject to a 40% gift tax. The only exemption to the gift tax is between U.S. citizen spouses. U.S. citizen spouses can gift an unlimited amount of money between each other without incurring any gift tax and without having to file any forms. This brings us to a nuance for U.S. citizens married to foreign nationals. If a U.S. citizen is married to a foreign national, the U.S. citizen cannot gift the foreign national spouse an unlimited amount of money. They're limited to $143,000 per year tax-free without having to file any forms. If the gift goes above the $143,000 in a year, it would necessitate the filing of a gift tax return and would reduce the U.S. citizen's $5.34 million lifetime gift tax exclusion. If the amount of the gift of the foreign spouse exceeded the U.S. citizen's lifetime gift tax exclusion, then it would be subject to 40% gift tax. There are some tax treaties that may provide additional relief that would allow you to gift more to a non-citizen spouse if there were a gift tax treaty with the country in which your spouse was resident. Another thing to remember is that gifts from a foreign national spouse to a U.S. citizen spouse are tax-free, and the U.S. citizen spouse can receive an unlimited amount of gifts from the foreign spouse without incurring any tax. Now, the U.S. estate tax is interesting. The U.S. estate tax is levied on the fair market value of your assets at death. Again, there's an exclusion, and it's the same as the lifetime gift tax exclusion. The estate tax exclusion is $5.34 million. So if you die and you had not used any of your lifetime gift tax exclusion, as long as your estate did not exceed $5.34 million, there would be no estate tax. If, however, you had used your entire gift tax exclusion, you would have no estate tax exclusion left, and your entire estate would be taxable at the rate of 40%. So for example, let's say you'd given taxable gifts in your life of $2 million. That would have reduced your $5.34 million lifetime gift tax exclusion to $3.34 million. That means at death, your estate tax exemption is $3.34 million. Again, estates above that amount are going to be taxable. A U.S. citizen spouse can inherit from a foreign spouse unlimited without incurring any U.S. estate tax. If, however, the spouse to pass away is the U.S. citizen spouse, the foreign spouse will not be able to take advantage of the marital deduction and inherit an unlimited amount of money tax-free. Basically, anything inherited by the foreign spouse is going to go against the estate tax exclusion. And if the estate exceeds the estate tax exclusion, it's going to be subject to estate tax. That concludes part 3 of our 4-part series, the U.S. tax obligations of U.S. citizens and residents abroad. We'll see you in part 4.